Alright, let's be honest, who doesn't love going to Home Depot every Saturday? It's one of the best smelling places in the entire world and also one of the leading retailers for home improvement, and it's also one of the strongest and most popular dividend growth stocks in the investing community today. So today we're going to be going over all the financials that you need to know before potentially investing in a Home Depot stock. I'll be sharing my opinions on the business, whether I own any or whether I plan to buy any in the future. And if you're going to Home Depot every Saturday, you're most likely a real man's investor, and for that, you're going to need the Do Dividend Stocks Not Drugs merchandise and a real man's investing shirt. The link's in the description. Thank you, and of course, roll the intro.
Hello, I like money.
The investing software that I will be using today to show you guys all of Home Depot's information is dividenddata.com. If you want to sign up for the software, use my link. It is in the description. I get a huge portion of the sale, and it really helps support the channel, and you get an awesome investment back in yourself. Home Depot is a home improvement retailer. Basically, you go there whenever you need anything. You're going to do a home project, you're building a new kitchen, whatever. You want to get some wood there, you go to Home Depot. It's one of the best places to go when you need materials, basically, for anything you're doing. The difference between Home Depot and Lowe's is that Home Depot is really geared more towards contractors and professionals who are doing it, where Lowe's is more for your amateur, everyday kind of person that may not be as experienced or do it for a living. So that's just to kind of clarify those things. Home Depot and Lowe's are basically a duopoly over the home improvement retail space, though. So a duopoly is essentially two companies that basically run the entire industry. Investing in monopolies and duopolies are extremely good for investors, but maybe not competition. And when I say monopolies and duopolies, I don't mean like complete monopolies, like straight up like oil and telecoms in the 1800s. It's mainly just really established and strong brands and businesses that are really hard to compete with naturally. One share of Home Depot is currently trading at $362.35. Home Depot actually reports earnings today, and I'm very curious to see how things go. Home Depot is currently not in my dividend portfolio, and I regret not buying when it was near $300. I've done my analysis on Home Depot, and I have it a stock that I want to add to the portfolio eventually, and you're going to see why in today's video once I go over the financials. But currently, they're trading at a P ratio of 23.23. Now, there are some investors that are extremely afraid of investing in a retail. Of course, I'm not talking about anybody in specific, but I think that Home Depot and Lowe's are really differentiate from your typical kind of retailer. Long term, there's always going to be demand for home improvement. There are just cycles in it. I think if you're going to be investing in Home Depot or Lowe's, you want to kind of time the bottom. I hate timing the bottom, especially with really high quality companies, but I think it would be best to load up during a time where maybe the housing market isn't as hot or there's lower demand for this. But I think Home Depot is a really high quality company, and I think it would be foolish to wait on the sidelines. But if you're going to start and build up a really heavy position in it, that's when I would ideally personally do it, and that's my plan for it. Currently, Home Depot has a dividend yield of 2.31%. Of the type of dividend growth that they've been having, that's pretty solid. Home Depot currently also has 470,000 full-time employees. We can see that Home Depot is consistently growing their earnings per share at a really solid rate as well. Alright, so when I start off with the financials, I always look at revenue first. And revenue is a good place to start, but it's not the end-all be-all when it comes to looking at a company's financial health. Revenue means nothing at the end of the day if that revenue does not equate to free cash flow. Free cash flow is where all your dividends, all your buybacks, and all your returns are going to originate from at the end of the day. We can see looking here, Home Depot's revenue growth is pretty strong. They have a 3-year growth rate of 15.16%, a 5-year growth rate of 12.45%, and a 10-year growth rate on the revenue of 11.94%. And we can see it is consistently and largely grown. Very quality stuff to see here from Home Depot. Well, once again, this means nothing if it does not equate to free cash flow. In our stocks, we also love to see good profitability and solid margins. Now, when I'm looking for core holdings, I want to see companies and businesses that have consistent margins. Ideally, you don't want to see crazy spikes in margins. One year they have a 5% margin, next year they have a 50%. An example of this is Target, and obviously, I think there was an offset with valuation there, but not to move away from the point. But we can see with Home Depot, their margins are very consistent. It's not the prettiest thing, but it is very consistent, especially considering that they're a retail company and they are at the end of the day impacted by some outside factors that they can't control that does impact their profitability and margins. Currently, their gross margin is 33.78%, their operating margin is 14.34%, and their net margin is 10.10%. So very solid margins here from Home Depot. But this can be heavily impacted by outside factors that are not in Home Depot's control, so keep that in mind. As I mentioned, we want to see that revenue equate to great free cash flow, and we can see Home Depot's free cash flow is really impressive. Home Depot's free cash flow is actually what made me choose it over Lowe's when it came to my home improvement retailer that I was looking at and when I was comparing it. Lowe's free cash flow, it's very good, but again, it isn't the consistency that Home Depot has produced, especially over the last 20-30 years. For me, consistency and growth is a huge thing of free cash flow. Obviously, every situation is different and value matters, so I do have some stocks with less predictable free cash flows, but they kind of offsets with value. Right now, free cash flow for Home Depot is not an issue. They have a 3-year growth rate of 3.64%, a 5-year growth rate of 5.51%, and a 10-year growth rate of 11.53%. And that's kind of skewed off again by the 2021 numbers. They had that stimulus money coming in, really much more people spending money at Home Depot, so that's going to give them a bit of a spike when it comes to the free cash flow, but still really quality long-term growth regardless. Especially with retail companies, you always want to take into account some macro things that could be happening. The stimulus checks really impacted a lot of retail companies. Target's another example. A lot of people are spending extra money improving their homes during the pandemic in 2021. It gave them a bit of an unrealistic spike in their business. Home Depot has really quality free cash flow growth at the end of the day, and it's one of the most ideal things you want to see. Just consistent, a line going up and right. The consistency of Home Depot's free cash flow is what kind of differentiates it for me from Lowe's. Typically, debt is a negative thing when it comes to a business, and it's something that can limit shareholder returns. We can see currently Home Depot carries a good amount of debt, but once again, for retail companies, you always got to do your due diligence. Most of this is store leases and really not an issue at the end of the day for them. But Home Depot does carry a decent amount of debt, but I'm really not concerned long term about this. If you look at any other big retail company, Walmart, Target, even Starbucks, store leases are a huge thing when it comes to debt, and really something that just scares a lot of people away, but they don't understand why. Alright, my dividend investors, get ready. Home Depot is actually set to increase their dividend in the next few days, and I'm very curious to see where we'll be at after we look at the payout ratio as well. But currently, quarterly, Home Depot pays $2.09 per share when it comes to their dividend. They have a 3-year growth rate on the dividend of 11.69%, a 5-year growth rate of 15.2%, and a 10-year growth rate of 18.28%. Absolutely wild dividend growth from them. Last year they hiked it 10%, and I'm curious to see where it's at this year because we're going to look at the payout ratio right now, and it may be a little higher than you expected. Dividends are the result of a company's free cash flow, which is why I always like to look at the free cash flow payout ratio over the net income payout ratio. Also, the net income payout ratio can be kind of skewed for accounting reasons. Currently, Home Depot's free cash flow payout ratio is sitting a little high at 67.75%. Historically, they're typically at 40 to 50%, and it's a little high right now, so I'm really curious to see if they're going to go with a lower dividend hike. I'm also curious to see if free cash flow recover a little more and that will go down, but really I'm not long-term concerned about it. A lot of companies increase that dividend a really large amount because of that extra money they had in 2021, and they have higher payout ratios right now due to that. And the EPS payout ratio based off of net income is sitting at 45.54%, which is lower. In the short term, it'll be interesting, but long term, I think their dividend is just fine. Share buybacks are another amazing way for companies to reward value to the shareholder, and we could say recently, last year, they bought back 3.12% of shares, which is a wild amount. And I'm a little confused off of this. I hope that they bought it back in the 300s when it was trading on a bit of a dip, but if you ideally want to see your companies buying back shares when the shares are really cheap, share buybacks give you more of a stake in the company with the current shares that you own. And seeing Home Depot buy back shares very aggressively and historically doing it at a really quality rate, especially since 2000, is absolutely a green flag for me. Moving on to Home Depot's valuation, currently they're sitting at a PE ratio of 18.4%. That's forward PE ratio, which is historically where they kind of trade at. So based off of free cash flow growth as well, this could be a potential indicator that Home Depot is trading near fair value. I still think it's a little overpriced. Price to free cash flow is trading a little bit higher, which is basically another valuation metric based off of the free cash flow, and we can see it's currently sitting near 28, which is historically higher from where it's trading at. So I think that Home Depot is a really high quality business at the end of the day, and I think long term it will be a great investment. For me, I'd like to buy Home Depot at around $330 to $320 if it went on a dip then. I think their business is really strong, but I also think that they're a business that can be impacted by outside factors, and I'd love to take advantage of a buying opportunity due to that. If the housing market ever slows down, or people are spending less money at Home Depot and Lowe's, I think that's the ideal time to load up on this stock, and that's probably when I would. But with amazing businesses, as I mentioned, you never want to sit on the sideline and lose out on compounding and long-term gains. I want to thank you all for making it the video. If you appreciate the stock analysis, I think it's one of the higher quality videos that I've done. Share it with a friend, subscribe, smash the like button, and of course check out the Do Dividend Stocks Not Drugs merchandise, the best looking merchandise for any dividend investor. Alright, thank you guys for watching. Do Dividend Stocks Not Drugs, and have a good one.